What's the deal? 7:22 p.m. Wednesday, February 13th, and I wanted to give y'all an update on my portfolio, and I wanted to read a quick article titled Aurora Cannabis: 8 Facts About Last Quarter's Performance. But first I'll show y'all what I did. I didn't do anything today, but yesterday I did get back in and I got back into Aurora at $7.15 right before the market closed. 271 shares at $7.15. And y'all could see all the other stuff I did. So yeah, Aurora Cannabis, 8 facts about last quarter's performance. Canada's recreational marijuana market is expected to send sales soaring at Aurora Cannabis. And on Monday, investors got their first glimpse at how this cannabis company is executing on its strategy to capture this massive opportunity. The company's first the company's fiscal second quarter financials include the first results since Canada's adult use market went live in mid-October. There were some bright spots, including surging sales, but also some worrisome trends, such as lower selling prices. Here are 8 must-know facts following Aurora Cannabis quarterly financial report. Number 1, sales are skyrocketing. The company's net marijuana revenue was 54 million Canadian dollars in the quarter ending December 31st, and that was a huge year-over-year and sequential jump in sales. In the same quarter the year prior, revenue was only 11.7 million Canadian, and in the quarter prior, revenue was only 35 million Canadian, including acquisitions. Recreational market sales were the biggest driver of that growth, totaling 21.6 million Canadian. Number 2, production is growing. Aurora Cannabis has one of the most aggressive plans for increasing annual marijuana production, and last quarter it made big progress on boosting its annual capacity. The company's marijuana production increased 57% quarter over quarter to 7,822 kilograms due to expansion projects at its Aurora Sky greenhouse and acquisitions. Number 3, prices are falling. Lower wholesale prices for dried flower have been a problem for growers in U.S. states operating mature recreational use markets, and they could prove problematic for Canadian growers. 2, the average selling price for dried marijuana and marijuana extracts in the quarter tumbled $2.16 per gram and $2.12 per gram, respectively, from the previous quarter. Number 4, medical marijuana remains key. The recreational market opportunity in Canada is huge, but the medical marijuana market is no slouch either. The company's active patient count climbed to 73,000 from 67,000 patients previously, and medical marijuana revenue accounted for about 48% of total net revenue in the quarter. Aurora Cannabis says it remains committed to the medical business, and new production capacity will be used to meet medical demand before it's used to meet recreational demand. Why? Because medical selling prices and margins are higher. Number 5, it's not just Canada. Unquestionably, Canada represents a big opportunity, but marijuana is still illegal in most countries, and as that changes, the opportunity globally is huge. The worldwide marijuana market is worth 150 billion according to the United Nations. If global pot prohibition is reversed, then Aurora Cannabis could benefit tremendously. The company is already tapping into an emerging medical marijuana market in Germany, which has a population that's double that of Canada, and management pegs that size of the broader European Union at 98 billion Canadian. For comparison, it expects Canada's market to grow to roughly 12 billion over time. 12 billion Canadian. Number 6, bottlenecks proved costly. Ramping up production capacity and effectively distributing marijuana to the adult use market proved challenging last quarter. The company had to use an all hands on deck approach to getting product out the door, and that took a toll on its margins. Gross margin dropped to 54% from 70% the prior quarter. Cash cost per gram produced increased to $1.92 from $1.45, and cash cost per gram sold increased to $2.60 from $1.90. Number 7, capacity is key. If the company hopes to wrangle costs lower, it will need its spending on expansions to translate into economies of scale. Fortunately, there is reason for optimism. The company says it's currently operating at an annualized marijuana production capacity of 120,000 kilograms, and it should reach an annualized 150,000 kilograms pace next month. That should translate into 25,000 kilograms of marijuana available for sale exiting June. Yeah, okay. So number 8, last one. Number 8, losses continue. Aurora Cannabis's net loss last quarter was a staggering 238 million Canadian, but before you panic, that loss comes with a big asterisk. The company must report unrealized gains or losses on its investments every quarter, and losses on its investments accounted for a whopping 120 million of the net loss in the period. For comparison, its prior quarter benefited from a 87 unrealized gain. 87 Canadian unrealized gain. If we back out the unrealized fair value loss, we get a clearer picture of Aurora's operating performance. Its selling and general and administrative expenses only grew 2% quarter over quarter to 66.4 million Canadian, and its total operating expense of 112 million Canadian in the quarter was a sequential decline from 120 million Canadian in the prior quarter. Nevertheless, the operating expenses still dwarf revenue, so it will be a while before investors can cheer profitability. So yeah, there you have it. Just 8 facts. I mean, that's just a summary. And actually, right now, my average cost is $7.15 in Aurora. Equity value 1,962. It's 99.6% of my portfolio, and I have 271 shares. All time, I'm up 12.3. Past year, I'm up 21.8. Past 3 months, I'm up 4.7. Past month, I'm up 18.6. Past week, I am down 2.27. And today, I'm up 1.2%. ACB is up 0.9. MJ, ETF Alternative Harvest, is up 0.4. CGC is up 4.7. Chronos Group is up 2.9. Afria is up 1.6. Hexo is down 0.1. And Tilray is up 1.4%. Tilray were supposed to release earnings today, but I mean, I haven't seen anything about it, or I've been looking like I've been searching for the news like on Tilray's earnings. I haven't heard anything about it, but it's all good. I really don't care much about Tilray, but it is pretty good to see how they do, because Tilray could, cause this sector to move a little bit differently tomorrow. So yeah, that's it. If you're new, just go ahead and subscribe. You won't be let down. That's it, y'all. Peace out.